Welcome, everybody. It has been a while. We have both been busy, but we are here and we are excited to be educating you today on what your employer isn't telling you about your life insurance policy and why it could leave your family unprotected. And so some people get their life insurance through work and think that's sufficient and that's enough. But we want to educate you today on maybe why that might not be a great solution. And you may not find that out until you are in a position where you realize and understand like this was not enough or this is not enough. And we want you to avoid that at all costs, obviously. So Gerald, welcome. It's always a pleasure chatting with you and educating our audience about the importance of this stuff. And you know, you're so good at it and you've been in it a long time and have brought me along on the journey. So this wealth optimization movement, I think, is such a key thing to be educating people on. And so that's what we're here to do today, is essentially just to educate you on why keeping your work and life insurance policy may not be enough for your family. And we don't want you to be in a position, like I said, to realize when you're in that situation that this was not enough, or you're leaving your job or retiring and you're realizing, oh, now I don't have life insurance. This is not good. Yeah. So let's kind of go through, Gerald, like why people replace their personal term policy with their work insurance. I think there's really 5 key reasons why people do this. And I think number 1 is that it's cheaper or free, because obviously it's included in their benefits package and it's something that they don't have to personally invest in. And it feels like it's a great deal, I guess, right?
Yeah, 100%. That's exactly it. And cheaper isn't always better. And naturally, yeah, I mean, if you're paying, I've seen people pay a couple dollars a month to maybe $20 or $30 a month. That's tied into their benefits package and all of that, which the truth is it's a great addition to, but it shouldn't certainly be replacing your coverage. But at the very least, having some is important. But that's where, like you mentioned, and I know we'll go more into depth on, you cannot rely on it. Even though it's convenient, it's great, take advantage of it, but you shouldn't be relying on it to protect your family and your financial responsibilities.
And that kind of leads us into the next point, which is convenience. There's no medical exams, there's no complicated paperwork. It's just part of their benefits package. So it's very convenient. It's a done for you service kind of system where, you know, you could be ill and you could be sick, but you're still covered. Which, I mean, is great if you are in that position, because sometimes it's harder to get insurance if you are ill or sick or whatever. So we're not saying it's a bad idea to have this or to utilize it. We're just saying that this should not replace a personal term policy, basically. And then leading into that, you know, it gives you, point number 3, it gives you a false sense of security. So you assume that because it's offered through your employer, it must be enough, or it must be the standard what people do. So do you have anything to say on that false sense of security?
100%. And I can't tell you, Michelle, how many times I've had somebody say, oh, no, Gerald, I'm good. I have coverage through work. And I say, that is terrific. Do you know how much coverage you have? And do you know how the process was? And I've never met anyone that says, oh, yeah, I know exactly this is how much I have. And the truth is, it's actually funny. When my sister started her job at the Quinny Healthcare, I helped her go through her benefits package, and it said, oh, here's some life insurance coverage. And it was like $25,000. And that's for a reputable kind of career position, a nurse. And so you're not going to get hundreds and hundreds of thousands of dollars. And when then you kind of went further into it, there was only like 1 or 2 health questions that it asked. And that was it. Like, there was no thorough underwriting approval. Again, very convenient. It's great. But just because you have coverage doesn't mean it's
It's enough.
enough, or it's going to actually cover you. Because so many people think just because I have insurance, I'm good. Well, you got to know those details. You got to know how much coverage you have, for sure. So, but yeah,
And
no,
I
I
think,
definitely agree.
yeah. Point number 4 is, you're not fully understanding what term life insurance is. And I think that a lot of people don't know what term life insurance is, and we won't go into depth into that. We will certainly do a video on this so you can go back and understand, what is a term life policy, but it's generally speaking one of the best policies to invest in for your future, to help you get to a point of financial independence, and then you don't need it anymore, which is great, but it's covering you for the interim of being, financially responsible for lots of things like we are in our 30s and 40s and 50s and all that kind of stuff. And then point number 5 for, why people do this is financial prioritization, which is, they drop their personal policy to save money, because maybe cash flow is tight. So
Right.
it's not really the best option for you, in terms of, saving money, because it could very much cost your family significantly if you aren't smart about this situation. So
Yeah.
that's kind of,
And to add to that, it's actually, exactly what you're saying. Like when people say, oh, Gerald, well, first of all, the thing with term insurance, it's very inexpensive. Like there's a stat that's shared every year when it comes to life insurance in Canada, that people overestimate the cost of life insurance by 3 times the amount. People think it's $200 or $300 or $400 a month. I mean, there's some policies that are that expensive. And if you're paying that, you're probably owning the wrong type. But term insurance is a fraction of the cost, and it can give you hundreds of thousands of dollars of coverage. Life insurance, term insurance specifically, should be one of the last things that you cancel, because if you're in a tight financial position now, if something were to happen to you and now you're already in a tight position, imagine how your family's going to be when you're no longer there. And so I rather people stop their investment contributions or decrease their investment contributions before canceling life insurance, because that's just, not a smart thing to do. And at the very least, I mean, look at decreasing your coverage, reviewing how much coverage do you actually need. That'll drop your coverage as well. If you may not need the same amount of coverage, or check your mortgage or credit cards or lines of credit for the mortgage insurances, credit insurances that you could cancel. But otherwise people overestimate the cost, and they don't really understand the importance of it, for sure.
And I think one of the main things you need to understand, with your workplace insurance is your job is temporary. Unless you plan on working until you die or never planning on retiring, your job is temporary. So your family's need for protection is not temporary. Your family's need for protection should be a priority for you, and it always should be, and that's not temporary. So so I think let's talk a little bit, Gerald, about why this is a bad idea and what people don't think about. Just to give you some food for thought, we're gonna cover 5 points, short and sweet, but these are things that you need to know and need to understand and be educated on. So we'll dive into these now. And so point number 1, you don't own it.
Yeah.
It's an employer provided insurance. It's not yours. So if you leave the job, you retire, you get laid off, you lose your coverage. So some policies are not portable or come with high conversion costs.
Yeah.
So, if you try to take them with you, I mean, it may come at a cost too, right? So,
Right.
what are your thoughts on that, Gerald?
Yeah, 100%. And that's where, if you don't own it, like you're not in control of it. And whether it comes to the coverage and type and all of that properly underwritten. And the truth is, most insurances that I've seen in my experience anyways through work are not portable anyways. And it just,
Right.
yeah, you're better off to just cover your bases, take responsibility for your family's financial future, and get your own coverage in place for what you need,
And
and
be
look
in control of that.
right.
Now, don't let somebody else or your employer be in control of your family's financial protection. Why don't you be in charge of that? And then it comes to point number 2, which is it's not enough. Like typical employer coverage is 1 to 2% or 1 to 2 times your salary, which is rarely enough to protect your family long term. Generally speaking, you probably have a mortgage. Maybe you have some car loans. Maybe you have some credit card debt, or high interest debt. You know, kids' education, living expenses often require 10 to 15 times your income. So this is not enough.
Right. And this is probably the most important part of this whole conversation, because the truth is, when and so many surveys in Canada about this, but naturally people rely on their group insurance so much, and it's like 40 to 50% of Canadians just have group coverage, and then the rest have a little bit of group and then their own personal. But it's a crazy stat. Like only 16% of Canadians have enough insurance to cover their mortgage balance. Like that is crazy. And yeah, you said it. I mean, 10 to 15 times is the most ideal for sure. If people are able to do that, great. But I think you and I always talk about this with clients. Like at the very least, you got to make sure that your debts are covered a little bit extra. Things are going to be okay if something were to happen prematurely. And it's not going to happen through work coverage. If 1 to 2 times your annual income, the average Canadian makes $50,000 a year, 100 grand. You being in real estate, housing prices and all of that, 100 grand is not going to cover a mortgage or be able to
No.
replace an income or those type of things. So that's
Well,
where,
not to mention, like, you have funeral costs and all those things too. And those costs might be a little bit more steep than you believe them to be. Like, they are a little bit more expensive than most people expect them to be.
yeah,
And if something unfortunate happens, your family is grieving. The last thing that they want to have to, or the last thing you should want them to be worrying about is how are we going to be paying our bills, and like giving them the peace of mind of being able to grieve, but be able to also still live comfortably knowing that you are taking care of your family, even though you're not there, which I
exactly.
think is, for me as a mother, I know that what if something happens to me, our mortgage is paid, all of our debts will be paid, and there might even be a little bit left over. So for
Yeah.
me, I feel confident knowing that they're not going to be, obviously they're going to grieve, but they won't be in a financial position to, because the breadwinner of the home is now not providing.
Yeah.
So I think, yeah. And coming into point number 3 is it can change or disappear. So your
Right.
employer can change the policy, lower the coverage, cancel it altogether. You have no say in that. So if the company is acquired, restructures, or cuts benefits, that policy may vanish.
And
So, and again, that's out of your control.
yeah. And there's some coverage too that if you don't pass away at work and you pass away maybe on a weekend, you get in a car accident, something, they still don't pay. And that's where a lot of work insurance in Canada, you have to pass away at work for the insurance to pay out. So
I didn't even
yeah,
know that.
yeah, it's
Crazy.
crazy.
Yeah.
So you're really like, people are just, yeah, they're putting way too much emphasis on giving somebody else the control to protect their family, and it's scary. It's scary.
I think one of the biggest points in this whole thing is number 4, which is you may not qualify later.
Right.
So why not get the insurance while you're young and healthy? Because usually with time, we aren't as healthy as we were once upon a time. And so, you know, having that term policy in place is going to allow you the opportunity to still have coverage if something does happen health wise, and you do develop health issues later on. it may end up being impossible or very costly for you to get coverage if you do leave your job or retire or whatever. You know, if you're retiring at 65, you literally, like, you can't get insurance past 70. Like, you can't qualify if you usually get insurance at the age of 70 plus. So your insurance policy is going to be very costly, right?
Yeah, and I think that's where, I mean, is insurance is one part of the conversation, and this is a whole other Zoom call conversation. But like, if somebody's working with a financial professional like yourself or myself, they should be having a plan that, I mean, later on in life, and this is unfortunate because if people aren't planning, then they have to rely on insurance. But the goal is for us to then later on in life, ideally, if you have your proper term in place, and again, you don't have to worry about this, but if you're not someone that has planned or saved and invested and done all these things, then you have to rely on your insurance. And like you said, it comes at a cost. So the ideal world is at retirement age, you probably shouldn't need it because you should have a lot of money accumulated. Your debt should be paid. But if you haven't been working with a professional or you haven't been planning financially, that's probably not the conversation, unfortunately, that you're having. So you need to start looking at these things now as soon as possible when you're young. So then you don't have to have that kind of conversation at that point.
Yeah, for sure. And that is point number 5, which is the retirement gap. You know, your coverage is going to end at retirement. And if you still have a mortgage, if you still have debt, how are you going to cover that if you haven't been financially responsible, I guess, in the interim of coming, you know, up to retirement? If you haven't, you know, been fortunate enough to save and invest and be smart with your money, then what?
Yeah. And that's where financial planning needs to happen. And you said it, like, if you don't have those things in place, then you need to be thinking this way. And because the truth is we don't, as we get older, the odds of us passing away doesn't go down. And so if you still have a mortgage and all these things, then the need for it becomes more and more significant. And so, it just reiterating a lot of points that we said, but if anything, whether it's getting proper insurance in place when you're young to kind of complement or look at
it's the cherry on top. Like, if it's extra coverage, then great. I mean, you've got extra coverage. That's awesome. Extra funds, hopefully. But I mean, it should not replace your personal insurance policy. And I would encourage you to now, maybe this is going to be the catalyst to you going and looking at your work benefits and your work policy. And you may find out that maybe it's only $10,000 of coverage, and that's not even going to cover your funeral. So, you know, it's just important to understand the importance of this, and to make financially sound decisions with the advice of a professional. And that's what we're here to help you with. And is there anything else that you want to add to this, Gerald? We're almost at the 20-minute mark, so hopefully you've just been listening on your drive to work or whatever. We tried to make this short and sweet so you can digest it and take it and hopefully learn something from it.
Just to reiterate what we've really talked about, you look at work coverage as an addition to, not in replace of, and just start planning your financial future as soon as possible. Take responsibility of it, your own like protecting your own family, saving and investing for your future. Again, that's a whole other thing. Don't rely solely on your pension through work as well. And work with a financial professional, because then one day you're going to be in a position where you're debt free. You have a lot of money saved. Your kids are older. You probably don't.
And you're going to be so glad that you chatted with us and you took our advice, because I know that even at 35, I'm thinking to myself, man, had I known this a decade ago, I would be in a different financial position right now. So I'm just trying to educate people, whether you're young or old, to make better decisions. So and please reach out to us. We work together. Yes, I'm a realtor, but I'm also in the financial industry as well, because I feel that people need this advice and need this education, and so that you can make good financial decisions, and you want to optimize your wealth and have that, working for you. So thank you so much for tuning in. Stay tuned. We're always posting new videos, and until next time.
See everyone soon.